welcome to this very special edition of the KJ Masterclass Live, the show which ensures that you profit from your time spent here with experts, either through their industry insights, information, or simply learning from them. And today we have David Doss, founder of CKC Fund, a US-based asset management consulting firm specializing in private investment funds. And we'll talk about a lot of things about transforming, how you can transform your financial future. Welcome to the show, David.
Glad to be here. Thanks for having me, AJ.
You're welcome. Welcome to the show. Welcome to India in this online form, David. And I'm sure not just in India, but a lot of people across the globe will benefit from what we'll be discussing right now. As I said, we'll talk about how one can transform their financial future with your understanding, with your learning that you have. But before that, let's learn a bit more about you, David, about your journey, about your background, so that people know better who they are listening to.
Yeah, so I grew up in the San Francisco Bay Area in California, and two things that are relevant to this. One is that my background was very multicultural, so I grew up in a Orthodox Christian community, which had a lot of different individuals from Europe, North Africa, the Middle East, and elsewhere. So from a really early age, I was fascinated with the ability or the power of global community, global impact, global mission. And the other aspect was just growing up in the Silicon Valley arena in the midst of the dot-com boom and bust, and also the real estate boom and bust that I saw, and experienced firsthand. People losing jobs, people losing their houses, these sorts of very real challenges. And to that topic of transforming your financial future, I think there's a lot to be said for the ability to take your future into your own hands, and also to plan your future around your goals. And so for me, traveling around the world, experiencing both how amazing it can be for global communities to have impact together, but also experiencing how difficult it is to move, for example, move money from country to country, or even state to state, to have a digital economy globally. This made me really excited about blockchain, digital assets, as basically having this really strong ability to create a more resilient form of wealth and more opportunities for more people, more businesses across a wider range of the global stage.
Right, David. So when we talk of digital assets, does it mean only about, say crypto, Bitcoin, and all those? Because there, it's not very far off when, when we had all that controversy, and only the good news that we talk about is the Bitcoin prices at a particular point in time. Beyond that, people still have their own mixed feelings about this. So how do you explain digital assets as a potential investment sort of a thing for people who are still looking at it from a bit of a distance?
Yeah, so to your point, AJ, when we hear about these sorts of things in the news, we usually only hear about either the sort of amazing things that happen or the catastrophes, and we generally miss what's going on under the surface, which is an incredible groundswell of innovation. And to your point, that's innovation that's beyond just Bitcoin. So one thing that I think is very important to bear in mind here is that Bitcoin at this point is blue chip. It's like it's like a kind of an established asset at this point. It's larger than many Fortune. The market cap of Bitcoin is larger than that of many Fortune 50 companies. It's larger than the market cap of silver. So at this point, there is a real case for investing into Bitcoin, but also, as with other asset classes like the stock market, there's everything else that's not number one, right? So when you're looking at stocks, often maybe you're looking at not just Microsoft, but also some of these mid caps, low caps. You're looking at different Microsoft is in the technology space, but maybe you're also looking at healthcare or industrials or financial services, somewhat similar in the digital asset arena. So another way to think about it, there are cryptocurrencies like Bitcoin, but there are many others. So there are 25,000 or more different cryptocurrencies out there that some of them are some of them may go away, just like startups, not all startups succeed, right? But many of them will carve out other niches. So if we think about, for example, the dot-com era and the innovation that birthed, we have, say, with social media platforms, Facebook, but we also have LinkedIn, we have TikTok, we have Instagram, and they solve different jobs for different groups of people, right? Probably very similarly, we will end up with multiple winners out of this space. And then lastly, it's not just about cryptocurrencies. Digital assets also include other technologies, other assets, such as tokenized real world assets. And according to many leading analysts and leading global organizations, such as the World Economic Forum, these tokenized real world assets, such as tokenized real estate or tokenized loans, these are predicted to have around 10 or more trillion dollars worth of value within the next 5 to 10 years. So ultimately, we're seeing a very broad spectrum, not just Bitcoin, but a whole lot of other things going on.
Right. I'll come to that Bitcoin part, but when you talk about tokenized assets,
Mhm.
are they the same thing as NFTs, or is it are these two different things here we are talking about?
Oh, and that's yeah. I didn't even mention NFTs, so that's a whole other right. So okay, you have tokenized assets. You have tokenized real world assets. You have sort of more, let's call them crypto native assets. That's one framework to think about. Another one is you're referring to NFTs. So there are NFTs stand for non-fungible tokens. You have, in contrast, fungible tokens. The fungibility just means you can split it up. Like let's say the dollar, you can split a dollar into many cents, right? But then there are things that are non-fungible, right? Where if I take a painting and I cut it in half of that painting is not worth half the value of the painting, right? I've destroyed the painting, so that would be a non-fungible asset, something like a painting. So to your point, NFTs in the digital space are things where they can't be split up and still retain the same kind of value. So you can have fungible tokens like Bitcoin or NFTs, such as, let's say, the Bored Apes. Uh, these types of tokens, they can be either only digital in their value, or potentially either one could be a tokenized real world asset. So, for example, I could have a NFT that is tied to a painting, for example, and you can't split it up, but you can transfer. It can show the ownership of that painting and be essentially a proof of ownership in the digital realm for that. Or you could have, say, a token representing that same painting fungibly, where you could say sell a share in the painting in a sense digitally. So there's a spectrum of value there.
Right, right. And now talking of cryptocurrency, we talked about 25,000 plus and more. In that aspect, if we just talk of Bitcoin, as you said, it's a blue chip now. And in that, people will have need a lot of money just to get into that thing. $75,000 or $80,000 is the latest I read about a few days back. Now, that seems to be a separate ballgame. And amongst the other 25,000, people will be confused because two things here. One is, does the price of Bitcoin going up indicate that the cryptocurrencies are back in currency? Or is it only about one particular thing, Bitcoin, and beyond that, things are not very clear? And secondly, how do you then see which one is the good one, because Bitcoin you cannot just enter. Everyone will not be able to enter easily.
Right, right, right. Well, you've raised a lot of really important points here. So, firstly, as far as Bitcoin goes, one important thing to bear in mind, and this is a common question that I get, is, oh, Bitcoin is $97,000 right now. I could never afford to buy a Bitcoin. That's fine. There's Bitcoin is a fungible asset, so you could buy $5 worth of Bitcoin, and point zero 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 whatever dollars worth of Bitcoin, or 0.0001 Bitcoin you could buy, right? You could buy $1,000 worth of Bitcoin. It doesn't have to be a whole Bitcoin. The other topic that you're raising though is, it's also important to bear in mind, it's not just about the price of one of these assets. It's also about how many of them there are. So there are other cryptocurrencies out there that are, maybe the price of the coin is, say, 50 cents, right? But there are maybe billions of them out there, uh, for example. So that doesn't, point being, the it's not just about the price of the asset, it's also about how many of them are out there and what the total market capitalization of them are. It can be easy to just think, oh, this is a low priced thing, therefore I should buy it, but it's not always the case. The other question you're asking about, in terms of the what Bitcoin's success means for the rest of the market, it's a broader question that many people have dedicated their careers towards. But broad brushstrokes, Bitcoin tends to lead, and then the others tend to follow. And this is somewhat similar with other markets, right? In most bear markets or down markets, for example, in the stock market, people will sell their lower priced assets and move into the higher priced ones to kind of consolidate and de-risk. But then in most bull markets, people will actually move out of the higher priced assets and into the lower ones, because the lower priced assets tend to actually experience very strong growth. So they're higher risk, these lower assets, but they're also potentially much higher reward. So what we see in the crypto market is Bitcoin right now, is on a tear. But then what we've historically also seen is that the altcoins will then, somewhat later on, actually surpass Bitcoin on average, in the value that they can drive for a portfolio. Then the broader question of, oh, so how do we do that? How do we find the next Bitcoin? That brings me back to my previous point about multiple winners, right? So the next Bitcoin might not look anything like Bitcoin. It's not about necessarily, uh, basically solving the same use case better. It's about creating, other categories, solving for those categories, right? So with that thought in mind, maybe, if Facebook succeeded, you're not looking for the next Facebook. You're looking for something that can exist alongside it and be driving a different kind of value. And so the how do you actually do that is I think either luck or research and a lot of hard work, right? And so how do you do that in a way that you can control and manage? Basically comes down to educating yourself, or working with people who are conducting that research, and then building out a portfolio. Some of these, even your best researched, allocations, some of them might not pay off, right? For every If we're trying to, say, invest in Google 20 years ago, right? Not for every Google success story, there were tens or hundreds of similar companies that just didn't make it, right? So basically, asset evaluation, research, education, those sorts of things, diversification, building out a portfolio of different high potential, investments, and then also rebalancing, being able to identify when you were right and when you were wrong, to move out of the assets that are not working and into other ones that could be working better.
Right, right, David. And that is where I'll come to you for CKC Studio as well as CKC Fund. We'll talk about that separately. But first, let's look at the transparency part in this digital assets? Are we more transparent than we had that during those days of scandal?
Yes. So there are many things to say about that, but overall, yes, I strongly see that that the space has come out the other end of a lot of these kind of difficult scenarios we've been reading about in the news over the last few years. The space has come out of those better and stronger, and this is also something where we're seeing, the more regulation. We're seeing more resilient business models in the space, and I have strong faith that that will continue to be the case.
Right, right. That will continue to be the case. So for a person who has been reluctant till now, how
Mm,
how do they get started with putting a bit of your of their hands into these digital assets? $5, $10 obviously will not work here. They will have to. How much percentage is a safe percentage of their portfolio for them in today's time to put into digital assets?
yeah. So just circling back to your previous question really briefly, it's really important to bear in mind also that any emerging asset class over history has had heightened risks, but also heightened rewards, right? So if you look at anything ranging from the railroad boom a few hundred years ago to the dot-com boom and various others, there's a lot of similar behavior patterns, which is that there are a lot of opportunities to create wealth, but there are also scams, right? And the scams tend to congregate in the new opportunities, right? So it's very important to be uh, doing your own due diligence, educating yourself, researching. But for those increased risks, there are also much higher rewards, and those rewards are ultimately what we would call asymmetric, where the risks are significant, but the rewards are much higher. So bearing in mind managing the risk, but then being prepared to capture a very outsized reward if if done properly, is the overall name of the game there. So in terms of that, that brings me to your other question about allocation. So what does this look like? Um, if you are doing this systematically in a way that's mitigating your risk, many people will be choosing to put a minority percentage of the money that they have, their assets, their net worth, into digital assets and cryptocurrency, right? And what that percentage is a very person to person question, depending on your goals, your risk appetite, all of these sorts of things. But broad brushstrokes, a lot of experts in the space will recommend putting anywhere between 0.5% of your net worth all the way up to potentially 20% of your net worth into this. And these are insights coming not from people who are the crypto people who are all crypto every day. These are things coming from resources such as Forbes or BlackRock or other sort of broader financial experts and analysts. And the point there being that if you have what I would call a small but mighty percent of your holdings in digital assets, it's enough for you to care about it, to be monitoring it, to watch it, and to learn and grow your knowledge as your portfolio grows. But it's something where it's small enough that if you don't succeed, you're not totally wiped out, but it's large enough to where if it does succeed, it makes a significant impact on your overall financial wellness. So say, for example, if you were to have 5% of your assets in crypto, this is the sort of portfolio where, yes, it could lower 50% in value in some cases in a matter of a few weeks. But if you are managing the risk and you are also holding a long-term view, it's also the sort of thing where that 5% could easily become 20 or 30%. It could 5x or 10x in value, and then all of a sudden you're looking around and you're seeing this make a very meaningful impact on the size of your overall holdings, not just in crypto.
Right, right, David. So can people have an expectation that, okay, this is the expectation, I can expect another Bitcoin to happen for me? Or is that a sort of a difficult thing and people should not think that way when they are getting into this asset class?
Well, the it's a tricky question, right? Because there's skill and there's also luck and timing being on your side, right? Um, a quote that I've really been loving lately is from President Eisenhower, American president, who he said, "Plans are worthless, but planning is everything." The broader point being, uh, you know, there are very few people, unless you have a crystal ball. It's very difficult to say this asset will be the next Bitcoin and will, 1,000x, right? But that being said, building out a plan um, is basically is still essential. Another way to put it is, that those who are working hard tend to be the ones that get lucky. Is another kind of saying along similar lines, that it's about the knowledge and the analysis and the discipline. And then, it's not a guarantee that the results will come, but it does enhance the probability of it.
Right. And that is where we come to the capabilities of CKC Studio as well as CKC Fund. Tell us a bit about these two entities of yours so that you know how do people make best use of this? How do you get people started into this?
Right, right. So we work on program management and asset management. So the studios on the program management side, we help businesses to incorporate blockchain, digital assets, and Web3 technologies into their overall offerings. So in a way that can increase their efficiencies and that can drive additional revenue streams for them. And then on the CKC fund side of things, we manage digital assets on behalf of high net worth individuals, enterprises, institutions. And to those points, I mean, we are here to help uh, be that source of expertise and guidance, where doing these sorts of things on your own can be a very rough road sometimes. But having the right team in your court can really make that a lot easier and vastly increase the likelihood of success.
Right, right, David. And if someone says, David, there are others also in the market. How do you differentiate yourself in a competitive market like this?
That's an important point to make. So overall, there is firstly something I'm really passionate about is the value of smaller emerging players, right? So in terms of asset management, for example, but also in terms of program management and consulting, you've got the top 5 or 10 players with their multi-billion dollar sizes, that they're really only working for the really big players, right? So let's say if it were, one of the big five asset management firms, this is something where people have to be writing $1 billion check for them to even give you the time of day, right? Whereas the smaller players are more customized, uh, more working for and with other smaller players in the space, giving them more care and more attention. So that is one aspect of things. The other is the team. I think it's very important to have people that you can know and that you can trust and that you can be um, that you can rely on, and relatedly also know that these are folks that are essentially professional problem solvers. This is the sort of space where there's often we don't none of us knows what we don't know in an emerging asset class. So it's not necessarily about having a 50-year track record because the space is only really about 10 years old. It's about basically being prepared, having the right systems in place, having the right people, having the right creative problem solving. And that's something where I'm very proud of our team in those regards as well.
Absolutely. So for those people who would like to learn more about you people and also be your client, what is the best way for them to connect with you?
Yeah, absolutely. So there are a couple of different ways we have on our company LinkedIn. We have a newsletter with monthly market commentary and insights. So I'd encourage you to subscribe to our newsletter on LinkedIn, or if you would like to shoot us an email at info@ckc.fund, you can reach our team. You could also ask us to put you on our email newsletter. I'm personally very active also on LinkedIn. So my LinkedIn URL handle is slash David Ambrose Doss. So linkedin.com/in/slash David Ambrose Doss. And you can feel free to reach out to me there directly as well. I'm also releasing a book about digital asset investing in the next few weeks here, not too long. So if you'd like to reach out on any of those channels and request a copy, I'd be happy to send you one. Can be digitally or otherwise. And with that, also, yeah, there's other if there are other channels, we can also figure something out there.
Wonderful. With this, it's a wrap on this very special edition of the KJ Masterclass Live. Thank you so much indeed for joining us.